In previous videos, we explained why some startups need to apply for funding. We mentioned that they raise funds mainly for growth purposes. The startup needs to go through a number of funding rounds and proves that the idea deserves the money, meets different goals, and challenges every time. Each round is designed to raise enough capital to meet a specific target, corresponding to in which the startup is positioned now. Here we will list the different funding rounds and link it with the different stages of the startup life cycle. Pre-seed round. Pre-seed funding is when founders are trying to give their idea the initial push and often invest their own money. At this stage, if founders want to raise funds, they raise it from people who are believing in them and in their ideas, such as family and friends. Seed Angel round. The seed round typically occurs when the business is still in the idea stage, or when the founder has a prototype or proof of concept and some indication that there is a market need for what they are proposing to sell. If not earlier, an angel round frequently happens when a company is barely getting started. It's likely that it won't be generating a large enough cash flow to cover all of the day-to-day operating expenses, which means that an investment will be required to operate the firm. Despite the names, a sizable part of funding for both seed and angel investment rounds typically comes from friends and family. It may also involve capital from angel investors who support startup businesses. Given that, the company will likely have a little to no track record, and that the risk would be greater than it would be for a more established company. Investors will typically invest smaller cash in exchange for shares. Series A round. Investing at this stage is typically viewed as high risk because the company will likely still be in the beginning stage with a lot to prove, similar to the prior round. After a company has issued share options, usually to founders and employees, it will often offer a Series A round of shares in return for funding. Venture capitalists may be interested, but angel investors also might. Angel investors frequently have substantial net worth and invest their own money. VCs and other institutional investors frequently invest other people's money. So, in order to lower their risk, they typically only invest in businesses having a track record of success. Series B round. A Series B round is, as you might have guessed, the second round of funding provided by VCs and private equity investors. The startup will likely be valued more than it was earlier at this point. Due to the business's track record and reduced risk than before, investing will cost more money. Investors will expect to see signs of growth at this stage in revenue, users, product, service success. Series C round. A Series C financing is typically necessary when a business is ready to pursue rapid expansion. At this level, the business should have these features. 1. Achieved market success that can be verified. 2. Intends to acquire competitors. 3. Boost market share through increasing production or creating new goods or services. It's simple to comprehend what a round means for the company raising money and how far it reached till now by understanding features of each funding round. IPO. Initial public offering IPO is the process of making a private company's share available to the general public and is the last phase of a startup's life. At this phase, the startup turns into a company available for anyone to buy stocks in it. This enables access to a sizable quantity of capital on the open market, as well as a higher degree of transparency. However, since you know how to deal with the shareholders in addition to investors, it also entails more complication. You should anticipate that such partnerships will take a lot of work and be difficult and expensive. With that said, We come to the end of our video. If you liked it, press like, share with your network, and don't forget to subscribe if you're interested in future content. This will help us to grow and provide more professional content that helps you to be a better opportunity hunter and super smart investor. Oh, don't also forget to activate the bell icon so you get notified with our new content.